Let's go now to our friend Bimnet, a BB from Galaxy Trading. As always, how are you?
Doing well. Thanks for having me.
Great to have you, as always. Big day today, Fed Day.
The Super Bowl.
It's your Super Bowl.
Absolutely.
What happened?
So the Fed raised rates today by 25 basis points, taking the band for the Fed funds rate from 4.75 to 5 to 5 and 5.25. That was pretty much expected. We had 22 basis points of 25 priced in. So this really came as it came as no surprise to anyone. In addition, we had the release of the FOMC statement, and we also had the press conference. I would say that the message from Powell and the statement was broadly neutral. It did not shock the market in any way, and you can see that by the lack of sort of major moves in fixed income and in traditional markets. I think the most notable sort of parts of it were his comments surrounding the banks and the regional banks in particular. He had a statement in there that said that he thinks the bank situation has actually eased from February to March recently, even though we've just had the First Republic issue. The one thing I'd like to note for our audience is that the Fed actually has the most advanced banking data available to it, and that is ahead of the market. They actually have the loan survey data already. In addition, what we've been told is that their staffers have been communicating with a bunch of bank executives over the past couple of weeks. So they are getting real-time sort of assessment of the banking situation amongst regionals. And so while I think that there's been a lot of sensationalism amongst the media and hype, I do agree with him that largely the bulk of the banking issues are from First Republic, Silicon Valley, Signature, et cetera, and that the rest of the banking system or the banking issues are going to be more drawn out as you sort of have the competition for deposits, et cetera, and they're not going to be like a bank is going to get run in a day. And so I
the
think
more acute threats to those regional banks we think have passed.
There's
still big lingering issues.
Yeah, but what he had to acknowledge simultaneously was that the data is still really robust, right? Just today alone, we had ADP, it's a payroll survey, add 300,000 jobs in the United States. That's not non-farm payrolls. That's on Friday.
Yeah.
But ADP, which is just good enough, is telling you that you're not only adding jobs, but you're adding jobs like at a really robust rate, as if you hadn't hiked by 500 basis points already, which is wild. And then you look at the service sector of the economy, which is really important because the Fed's focused on services inflation, right? ISM services came out today, surprised it a little bit higher. Prices paid for services, surprised higher. New orders for services, surprised higher.
Right.
And you had the PMI for services come in expansionary territory once again. And you also have global PMIs that are starting to shift higher. And so the data with respect to prices and service prices is telling you that you could probably still continue to hike.
Yeah.
And the unemployment market, he said so in the speech today, unemployment is at a 50-year low. 50-year low.
Wow.
And so yes, we do have these banking issues, and we've had 3 large banks fail under his watch, and any reasonable person can get to the conclusion that there wasn't sufficient supervision, and that hiking rates too quickly and too high was probably a mistake, or not doing it sooner, or making it more gradual, et cetera. Right? There were mistakes made, but it does not change the data backdrop. And I think the moment you get through this banking crisis stuff, people will settle and realize, what are we in? We're in a world where the U.S. economy is still adding hundreds of thousands of jobs per month. And without that labor unemployment starting to tick up, it's going to be very tough for inflation to come down. And I think certain folks, draw comfort from the idea that inflation break-evens in 2s, 5s, and 10s, they're basically at 2% right now. What I'd like to remind people, and what I constantly say, is that every single smart person is basically awful at predicting inflation. They have been for decades. Every central banker, every trader, etc., for the most part, I don't know anyone that has been consistently right on inflation. And so, when you see the market telling you you're going to get to 2% inflation, I'll be like, no, no way.
Like that
I
could be
just know
completely
that's
wrong.
It could be
yeah, it's
completely
likely to be wrong. Yeah.
And it's just a function of like just habits and like things that have changed over time. Like you're telling me that, when you start going to the doctor and you're paying $100 a month and they're raising it $10 every year, they're going to stop raising it at some point? Like that momentum has already started.
Yeah.
Right. And I think, again, it goes back to like the difference between Western folks and EM folks, right? EM folks have seen the fight, against inflation. It just doesn't go away. It becomes entrenched, especially when you're talking about a labor market that's at a 50-year
people have good jobs, and so I mean, even today. So again, it's Wednesday, May 3rd?
Correct.
And which is why it was Fed Day. And no, I mean, even today, I'm watching people buying. It costs $16 here where we work, not in our building, but like at the place nearby, for 3 slices of pizza.
Absolutely.
$16. It's more than $5 per slice of pizza. And the line was out the door.
Out the door.
People are willing to pay that. And so like it's now this is, Lower Manhattan. It's a business area. Like there's plenty of cheaper pizza in New York than that. But I mean, like that line is, no one's being like, oh my God, I can't eat this today.
Honestly,
I'm going to go to a cheaper
any
place.
airport. I mean, restaurants, etc.
They're all pretty expensive.
Everything's expensive. And here's
like
the
if
thing.
we want inflation to come down, everyone needs to collectively throw their hands up and say this is too expensive. But more of them are employed than ever, right? Like people don't feel they have to collectively.
Well, here's the thing. Unemployment's low, but there's also huge social safety net programs, right? The student loan payments that were paused, the foreclosures that were paused as well. And then you just have this excess savings build from the stimulus checks,
right,
the PPP loans, et cetera. Like you're still talking about like over $1 trillion in excess savings in the U.S.
I saw that chart still. Even still. Oh, let's talk about the debt of the United States of America. Oh my God!
Don't even get me started.
So we have a lot of it. What do we have? Over $31 trillion of
32
debt.
plus trillion. I'd guess 33. I'd lift the over on 32.
It's a lot. It's a lot of debt. Gosh
Ongoing.
Darn, that's a lot of debt. You got a credit card. It's loaded up.
Just try counting to $1 billion.
But we're
then counting to $1 trillion.
We've basically hit our credit limit.
Yes.
Right. Amex is saying, whoa.
Oh, whoa, yeah.
But we have this ace in our sleeve. We can actually, it turns out we're on the board of the credit card company, and we can say, you know what, raise our limit. And that's what we've been doing now for decades.
Yes.
And we have to do it now because we have exceeded the limit or hit the limit. We've talked about this. The Treasury is currently using extraordinary measures to fund the government. These are payments that we've already committed to, right? So it's not new spending. And we had thought that for a while it had been said that we could last to July, maybe even to August.
Correct.
Before the debt ceiling limit had to be raised. Now there's negotiations. The House managed to pass something. Speaker McCarthy rallied. It has other stuff. I think the Democrats were calling it like a right-wing ransom note, I think is what one of the Senate Democratic leaders said. They're jostling now the Secretary of the Treasury, who is Janet Yellen, who is the administration's chief economic spokesperson. She has now said it may hit the debt ceiling by June 1st. That's less than a month away.
Correct.
There's some posturing there, but what are we like? How important? It's very important that this gets solved.
It's insanely important that the U.S. government does not default on its debt. It is the backbone of global finance, is the U.S. debt market.
Right.
And so it would be a pretty big deal. Most people have no idea what the actual implications are in terms of like how wild things could possibly get.
You mean the average person or smart people or everyone?
Everyone.
Yeah.
No
one knows. It could be economic apocalypse.
Or it could be like people have rushed to buy the bonds because it's a flight to quality. Like, I don't know.
Because we could
default,
default
and then sell off? Does it go bid?
No one
knows.
knows.
Like, who knows?
Volatility is the only thing we can be certain of.
Absolutely.
Yeah.
Which will bring me to a different point later on. But I think what you have is a setup that is really constructive for Republicans, I think. I think if you're an incumbent president, right, that is running for re-election, you've got a lot more to lose than the congressional, Republicans and Senate Republicans, et cetera. Because in the election, right, who ultimately is going to get the blame for not raising the debt ceiling?
If this goes wrong, the president and
you blame
the
president.
Yeah.
Right. And I think he's got a lot more to lose. And so I do genuinely think that Republicans will come out with something tangible.
Some kind of like a moratorium, cap on future spending, and et cetera.
Whatever it may be.
Right.
And the other thing I know that I think for sure is that it will go down to the wire. Right, you will get more bang for your buck in terms of negotiating when it's, like imagine it's like you're doing that 2-car thing,
Yeah,
right? Like
game of chicken.
Game of chicken, right? And it's gonna be the first person who flinches will lose, and so
Right.
ultimately, I think it's gonna come down to the wire, just because I think that's how the game theory works.
Yeah.
And I do think that Republicans will kind of win, but on the off chance that the U.S. government does default, this is literally one of my favorite reasons to own Bitcoin ever. Is the U.S. government potentially defaulting because of a government that does not work. Again, friendly reminder, this is the same Congress that took 16 attempts to elect McCarthy for House
Speaker.
For
Yeah.
Speaker.
Yeah.
Right? And so this is a divided Congress, and let alone within their own parties, but amongst each other as well. And the idea that the most important institution, government in the world is about to default, and it's
Mostly
gonna
over political bickering too. Not
Political
even
bickering,
they're not
et cetera.
making a determination that we shouldn't raise the debt limit.
No,
they just
absolutely.
are fighting
But
about it.
people will
Yeah.
fundamentally start doubting the idea of money and U.S. Treasuries and what that means, and I think that's going to be so incredibly constructive for Bitcoin. I think the number one trade to have as a hedge, for a government default is owning Bitcoin calls.
Yeah.
I think Bitcoin could trade, north of this year's highs in probably closer to 40K on the chance of a genuine government default.
Right.
And so given how cheap those wings are, especially short dated stuff, I think owning Bitcoin wingy upside is probably one of the best diversification government default hedges you can possibly have.
Yeah.
In a portfolio. And I think it's almost if you were managing hundreds of billions in a cross asset portfolio, you're a big insurance company, you're a big real money account, and you're in crazy amount of treasuries, right? The CDS market for US barely exists, right? You got to trade with a non-US bank, and it's weird. You might not get your payoffs. The best hedge for that, I think, the best convexity in the market is Bitcoin wings, and there are some other products as well,
Interesting.
VIX and other sort of structures that could do well. But from my standpoint, I would feel like I was going against my duty to my firm, fiduciaries,
You
etc.
got to bring this up, is what you're saying.
Yeah.
This is a real. I mean, it
It's
makes
a real
sense, right?
thing.
It's a non-government issued FX. That's how I think about it. A lot of people, including our boss, think about it as digital gold,
Absolutely.
which plays the same kind of role. I mean, gold would presumably
Gold
do
will do
very
very
well
well.
in that scenario.
Yeah.
Let's hope it doesn't happen. Mike Novogratz always says that he goes to bed every night praying for sound financial stewardship of the economy.
Absolutely.
But
So do
this
I.
question, of course, but this question, we don't want, political operatives playing chicken with the U.S. debt, right? So I don't know. We're going to have to wait and see. We will follow up on that debt as we get closer. We've got about a month, it seems, to watch this play out either way. But that's all for now. Bimnet Abibi from Galaxy Trading. As always, my friend, great to see you.
Pleasure. Thanks for having me.